Welcome to HYCM Insight with myself, Giles Coughlin. Now, the Australian dollar Japanese yen pair is a really interesting pair because it could be about to register some decent gains over the coming weeks for the following four reasons. First of all, Australian dollar shorts look very stale. Last year, Australia's economy was hit by COVID concerns and a slowing Chinese economy, as Australia's economy is heavily influenced by what's going on with China. And China's economy was weighed down by default fears from their property sector. Now, those risks, to a large extent, are starting to fade, and China is boosting its economy now with the People's Bank of China cutting interest rates, and more fiscal stimulus is still expected. Now, the Reserve Bank of Australia has met its three targets at its last rate meeting, and the obvious next step would be to hike interest rates. The Bank of Japan, for the Japanese yen side of things, has promised to buy an unlimited amount of JGBs in order to keep the yield between plus 0.25 and minus 0.25. So while other central banks are seeing their yields surge higher, the Bank of Japan is keeping their bond yield very low deliberately. This structurally should keep the Japanese yen weak. Furthermore, Japanese inflation is still well below the Bank of Japan's 2% target, so there is limited inflationary pressure on the Bank of Japan to change policy tact. So there isn't any good reasons for the yen to gain due to monetary policy concerns. Now, if you look at the seasonal pattern coming up for the 19th of March, we can see that we're heading into a period of strength from March 19th through to April the 11th, with gains in 10 years out of the last 15. The average return has been 2.37%. The annualized return has been 44.99%. So there is a period of seasonal strength that the Australian dollar Japanese yen is heading into. Now, HYCM clients can access the SeasonX product in order to analyse over 25,000 different currency pairs, indices, commodities, as well as individual stocks. So please do contact your account manager for a free trial to get started right away. Major trade risks with this outlook. Now, the main risk here is any geopolitical risk, most likely from the ongoing Russian-Ukraine crisis. This can result in strong bids coming into the Japanese yen. So looking at the Australian dollar Japanese yen chart, we can see that any retracements back down to that 82 region does look attractive for buying, with a first target at that 85-86 region, with stops just below that 80 or 80-50 handle on the daily chart.